Good morning. My name is Alessandro Barison, Portfolio Manager of the QuantWave Fund. Welcome to our monthly update. October was a very challenging month and a disappointing month as far as the performance is concerned. Our strategies were down 4%. The main driver were losses in our FX and rate strategies. Our FX strategies maintained a long dollar bias, especially against the yen, and this clearly didn't have a good performance given the risk-off environment during the month. Our rate strategies tried to tactically buy bonds into the sell-off, but the sell-off was very severe, and we actually had losses on government bonds strategies, especially at the beginning of the month. Our strategies on risky assets had some losses as well, and especially in the credit strategies where we kept a long bias position on US credit indexes driven by fundamental variables, which were very supportive, and flows variables, which are very supportive as well. But clearly this sell-off in the equity market drove the credit spread of the US credit wider, so we had some losses there as well. So October was kind of a black swan month for quantitative strategies. Almost everything that has worked in the last 20 years, if you look at historical data, didn't work in October. This isn't the first time it happened. It has happened a few times in the past. We are confident that we can do well from now on, because every time this has happened, our strategies moved to a higher sharp pressure regime, and they started to do very well in the following months. So we are confident we can recover the losses. We are confident that we can do well in the next few months. What we are observing is that our models are keeping a very short-term bias in terms of trading horizon. Hedging variables, technical variables, and flows variables are still the main driver of our positioning. What we are observing is that slowdown in economic data, in growth, with the growth slowing down, is having an impact on our positioning, which is still small, but it will probably increase, and is going to become, we think, a big driver in the following months. And this means that we will probably have a short bias on risky assets going forward, driven by economic data which are slowly slowing down. And we think also fundamentally our view is in the same direction. Probably November is going to be a more quiet month in terms of volatility, but there are a lot of potential catalysts that can bring the market down even more from these levels. And we think our model will be able to pick it up given what we are observing in the data. That's all. Thank you very much for your time, and have a good day. See you next month.